Hi, IBD. I'm Meredith Heyman. This is Industry Insights. Thank you so much for joining me. Now, each episode, we're going to break down a hot IBD news topic. And joining me today is Mike Colias from the Wall Street Journal. Mike, thank you so much for being here.
You bet. Thanks for having me on.
Absolutely. So, we're going to chat for a few minutes. The United Auto Workers strike, it's been going on for about a month. And let's start kind of at the beginning. What exactly are the strikers' demand, and which automakers, are being affected?
Yeah, these are the Detroit three companies. So it's General Motors, Ford, and Stellantis. They're the ones that have the unionized workforce in the United States. You know, the union, I think, feels like it's got a strong hand, and we've seen this across the country where unions have gone on strike. They've gotten big pay raises and big concessions in contract negotiations. I think the fact that inflation's been really high in the last few years, so that's hurt their members. You've had a labor shortage. That's going to help the union's cause, and the companies have been really profitable post pandemic. So I think the union felt like it could go big. It came out asking for a 40% wage increase over the 4-year contract, as well as a bunch of other things, cost of living adjustments, better retirement pay. At one point, they were asking for, I haven't heard as much about that, but I think it was a statement on just kind of like better work-life balance. And then a big thing is job security too. They're worried about losing jobs because of the electric vehicle transition, and there's a lot going on there, and there's some concerns around whether or not they're going to lose members over time.
Right. So theoretically, if all of the UAW demands are met, what would that do for the economics of the auto industry?
Yeah, right now, I mean, these companies are concerned. The strikes we're into the 5th week now. The companies feel like they've already given, at the table more than they expected. I think this contract, once this thing does get settled, is going to be more costly than they expected. I've seen estimates from analysts of between $1 billion and $1.5 billion of extra labor cost per year for the three companies, and so it's manageable. They can offset that, but at the same time, it puts them at a tough cost competitive standpoint with Tesla. The Asian automakers like Toyota, Hyundai, they're not unionized in the U.S. And so I think that's kind of the bottom line argument from the companies is, look, we've got a really strong offer on the table here, but if we go much more than this, it's going to make us less competitive. Are we going to be able to afford to keep jobs in the U.S.? Are we going to be able to win against these other companies? You could win the battle but lose the war because we're all in this together. I mean, that's kind of where we're at.
And ripple effects, are we likely to see higher auto prices?
I think it's possible. I mean, we're talking about the Detroit threes, roughly half of the market in the U.S. So right now, these other companies aren't affected, the Toyotas and Hondas and Kias of the world. Over time, I think some of this cost inflation is going to naturally creep over to them. They have lower labor costs now. I think when their workers see that the Detroit companies just gave their people a 25% increase or whatever it ends up being, that could cause some inflation there. They could actually, I think the unions have designs to organize some of those plants. They have not been successful in the past doing that, so I don't know how far that'll get. But I think in general, we are probably going to see some labor inflation across the board in the industry, and that could lead to price increases over time. Then again, we've seen huge price increases over the last 3 years, partly due to some, a vehicle shortage, supply chain related, but we're bumping up at a pretty high ceiling right now in terms of car pricing.
And the outcome of this strike, if all of the UAW demands are met, as we were discussing, is this something that could put the auto workers just out of business?
Yeah, I mean, I don't think the car companies, it's not an immediate existential question for them right now. I think they can continue to compete where they do now, which is internal combustion vehicles, right? Big trucks, SUVs, that's where they make their money. There's lots of margin in those things. They can cover the costs, even if this is going to be, these labor expenses are going to be a lot more than they expected going into these contract talks. I think the bigger concern is what they're trying to do right now is pull off this transition to electric vehicles. All three of these companies, GM, Ford, Stellantis, are spending tens of billions of dollars to convert to electric cars, as are most other automakers. But the issue is you've got Tesla out there now, which is already more profitable, already has lower labor costs, is making these cars at scale. And so the concern for the companies is, look, Tesla has so many different cost advantages right now. This is just, yet one other thing that's going to put us further behind. And so I think, does this make it harder to win in that EV transition? I'd say definitely.
Yeah. I mean, more on Tesla. Is it giving them a leg up right now, the strike?
Yeah, I mean, I think Tesla's one of the big winners here. I mean, they're seeing, we think that Tesla, they don't provide this publicly, but we think their labor costs all in is something around $50 an hour. That includes benefits and everything. Even before this contract goes through, the Detroit 3 are more in the low 60s. So that's going to bump up, above 70. That's a pretty big disparity between what Tesla has to pay its workers and these companies. And Tesla already has advantages in terms of battery supply. They've vertically integrated all this stuff to scale electric vehicles, and these companies are just in the process of that. And so I think, at the end of the day, another advantage, Tesla doesn't have dealerships. These companies have dealerships, which can be an advantage in some ways, but also is more costly. So Tesla is well positioned for the electric vehicle transition if that transition happens, at a cadence where a lot of people think. I mean, if it's slower than expected, then, the traditional automakers, I think, have a bit of an advantage there.
Going back to the strike, where do you think we are in terms of timing of coming to a resolution? Or are these two groups still really far from each other at the negotiation table?
I actually think even though Ford, there's been a lot of back and forth and a war of words between Ford and the union in the last week, because the most recent strike action was taking down Ford's truck plant in Louisville, Kentucky. It's their most profitable plant, their largest, almost 9,000 employees. There's been a lot of ripple effects and layoffs related to that. I mean, Ford executives are really angry about this. But I actually think it could be a sign that that they're close. And I think, the union with this strike strategy, they started small and then kind of ratcheted up from there instead of just going all out and striking every factory at once. And so I think what you're seeing is the union saying, okay, we're going after your most important factory. This is kind of like the highest escalation short of an all-out strike. And so remember, these union leaders have to go present whatever deal they make with a company to the workers. They have to get the workers to vote on it. And you don't want to go to the workers and have them shoot it down. And so this is a signal from the union leadership that, look, we took them to the brink. This is the best deal we can bring you.
Mm-hmm. And now going to the market, how are automaker stocks faring, and how might they react depending on how the negotiations play out?
Yeah, I mean, the thing to remember about automaker stocks is that this is an unloved class of stock, right? I mean, these are highly capital intensive, low margin. They're regulated. Labor issues as we're seeing here, and GM, for example, its stock price is below what it was in 2010 when it had its IPO after its bankruptcy. So it's been a slog for these companies. The strike hasn't helped. It hasn't been a huge hit. I think Ford and GM are both down roughly 10% since it started. I think Stellantis is maybe up even, and they've had a good year. And I think that's partly because they're not as tied to the US market. But so far, I think investors are rolling with what's gone on because it hasn't been an all-out strike. The hit's been relatively modest. Now that's going to change with Ford's biggest plant being down. And the more plants that go down, I think it's going to pressure the stock. I think the biggest thing is, will the investors be okay with whatever deal they walk out of this with? Because the strike is less of a concern to them than the baking in of fixed costs going forward, which is what this labor contract is going to do. And if that goes too far, I think it's going to hurt the companies.
All right, Mike. Well, we'll be watching. Mike, thank you so much for joining me.
Thank you so much for having me. I appreciate it.
Absolutely. This is Industry Insights. I'm Meredith Heyman. We'll see you next time, and thanks for watching IBD.